U.S. President Donald Trump, in his State of the Union address, said the U.S. economy has never done better. But of course, that comes after the U.S. Supreme Court's decision to overturn some of his global import levies. Let's find out what the impact here on the broader economy will be, including here at home. Preston Caldwell joins us now, chief U.S. economist at Morningstar. Preston, thank you very much for joining us. Was there anything, President Trump, as politicians do, sang his own praises. Did anything jump out for you concretely, economically, in the State of the Union address?
No, it was a fairly backwards-looking speech making the case for the administration's performance thus far. So I didn't glean much in the way of what's to come for tariffs. I think we're going to have to wait a matter of weeks and even months to see how the tariff situation shakes out, because really what's key is these Section 301 tariffs that are going to come into place for various countries after the 150 days of Section 122 tariffs expire. And those Section 301 investigations take quite a bit of time. If you think back to the 2018 to 2019 period in the first Trump administration, when those were levied on China, that was a multi-month prolonged process to get those tariffs in place. And so it's not like what we saw with the IEEPA tariffs that were just struck down, where those could be put in place with the stroke of a pen. There's massive amounts of paperwork and documentation and argumentation that has to take place. So we'll still be waiting a while to see what the longer term tariff regime looks like for the rest of the Trump administration.
Tariffs have been a money machine for the U.S. government, revenue well over $100 billion US. I know some people have likened them to a sales tax, which would be politically anathema, a federal sales tax. So broadly, have the tariffs been a win for the United States?
So in our analysis, tariffs are a significant efficiency drag on the economy in the long run. Now, what I will say is that many of the ill effects of the tariffs have not fallen into place for the U.S. yet, because very little of the tariff costs have been passed on to final consumers. And therefore, you've had relatively little in the way of altered economic decision making because of the tariffs, because the final consumers aren't paying those costs yet. And that was for a variety of reasons. In 2025, I think companies were still selling their pre-tariff inventory, so they didn't feel they had to raise prices yet. And also they were waiting for the Supreme Court decision to kind of bail them out. But, now with tariffs lasting at least, high tariffs lasting at least for another 150 days, and after, what happens with the Section 301 investigations, perhaps quite a bit longer, companies may be still looking to pass on quite a bit more of that tariff cost to consumers. And once we see that, then the negative economic consequences will, I think, start to manifest in a larger magnitude.
In the sense that goods that are more efficiently produced outside the United States are costing people more.
Precisely, yeah. And you mentioned the revenue benefits from tariffs, and that is a factor. That's a few tenths of a percentage point of GDP, so nothing to sneeze at. But we think of tariffs as being a relatively inefficient way to tax, because they're a high tax rate applied to a narrow tax base. So all taxes have some efficiency consequences, but tariffs are generally thought to be particularly large.
And of course, rebuilding America's manufacturing base, if that's possible, that's a thing that's going to take decades. These are such slow-moving events.
That's certainly something we haven't seen yet at all. Manufacturing employment, manufacturing output has been, flat to down over the past a couple of years. So there's been no impetus to the U.S. manufacturing sector from tariffs so far. And that ties in with what I said earlier about, this not really hitting consumer prices yet. So consumers, heretofore haven't had reason to switch from imported to domestic goods because they're not getting a price signal yet.
And apparently in the U.S., there's been a lack of business investment, relatively speaking. That's a problem plaguing us in Canada as well.
What's interesting right now is, as of the fourth quarter, 2025 in the U.S., private fixed investment would have been in negative territory, negative growth territory, if not for the impact of AI. So AI is the single driver that's propping up positive growth in fixed asset investment for the U.S. Everything else is still feeling the effects of high interest rates. For one, there's a few other factors that are at play. But yes, indeed, private fixed investment is still in a somewhat vulnerable state, if not for this boom in AI that we're seeing.
Yes.
And who knows how much longer that boom will last.
Yeah, it's interesting. I've read, we're out of time, but we'd love to have you back maybe to discuss the sustainability of the AI investment curve, et cetera. Thank you very much, Preston, for joining us.
Sounds great.
Preston,
Thank you, Andrew.
Preston Caldwell, Chief U.S. Economist at Morningstar.